Webull stock closed Tuesday at about $15 even, ticking higher by a few cents after a session that saw plenty of swings. It traded as low as $14.77 and as high as $15.29, before finishing the day with modest gains. On the surface, that may not sound like a dramatic move, especially compared to some of the double-digit percentage rallies we've seen in recent weeks. But beneath the surface, there are some powerful currents driving renewed interest in Webull and laying the foundation for what could be the next leg higher. What's interesting about Tuesday's action is that it came on the back of several developments that strengthen the bull case for Webull stock. First, the company just received a positive analyst upgrade, with coverage highlighting three key factors: accelerating revenue growth, rising user deposits, and improved monetization per user. In other words, not only is Webull growing its user base, it's finding ways to earn more per client. That's critical in the brokerage world, because margins can be thin and scaling profitably requires more than just signing up new accounts. The upgrade was accompanied by a buy rating, and that kind of vote of confidence can attract institutional buyers looking for confirmation before putting capital to work. At the same time, Webull has moved to simplify its crypto trading experience in the United States by folding Webull Pay directly into its main platform. In practical terms, this means users no longer have to juggle separate apps or accounts to access crypto. They can buy, sell, and monitor digital assets from the same interface they use for equities and options. That integration may sound small, but in an environment where retail investors want convenience and speed, it can be a real differentiator. The relaunch of US crypto trading also carries symbolic weight. It shows Webull is confident in navigating the regulatory landscape and sees crypto not as a niche, but as a core part of its offering. For context, Robinhood leaned heavily into crypto trading during the last cycle, and it provided a major lift to engagement and revenues. Webull could be lining up to follow a similar path, with the benefit of hindsight and better integration from the outset. And if that weren't enough, Webull also announced expansion into Australia. Through a partnership with Coinbase Prime, Webull users in that market will gain access to more than 240 cryptocurrencies. This move not only extends Webull's global footprint but also ties it to one of the most liquid and secure institutional crypto infrastructures available today. Global expansion is important for two reasons. It diversifies revenue sources across regions, reducing dependence on US volumes, and it positions Webull as a truly international player. The fintech landscape is increasingly borderless, and platforms that can win across multiple geographies will be the ones that thrive in the next decade. So when you put all of this together, an analyst upgrade, streamlined crypto in the US, and new market launches abroad, you can see why investors are starting to take Webull seriously as more than just another brokerage app. Add in the fact that Webull already reported its first profitable quarter earlier this year, secured a $1 billion equity facility for growth, and serves over 24 million users with $12 billion in assets, and the narrative becomes clearer. This isn't a speculative startup anymore. It's a profitable, scaling fintech with big ambitions. Of course, the market never moves in straight lines, and Tuesday's relatively modest close at $15 shows that sentiment is still cautious. Broader conditions are weighing on growth stocks. Even after Powell's dovish remarks at Jackson Hole last week, investors remain sensitive to macro uncertainty. Bond yields have dipped, but questions linger about how quickly the Fed will move and whether inflation risks have truly been put to bed. Those crosscurrents mean that fintech names like Webull can still experience sharp swings as the market digests new data. From a technical perspective, Webull's chart is setting up an interesting picture. Support has been forming around the $14.75 area, and the fact that buyers stepped in there Tuesday shows that level is being defended. On the upside, resistance remains around $17, which has been a ceiling in recent weeks. A breakout above 17 with strong volume could open the door to the high teens, while a breakdown below 14.5 could see momentum stall. Right now, the price action suggests consolidation, but consolidation after a period of strong gains isn't necessarily bearish. It often sets the stage for the next move. Investor sentiment is also evolving. Earlier this summer, much of the chatter was skeptical, focused on volatility, regulatory risk, and whether Webull could carve out a niche against giants like Robinhood, Fidelity, and Schwab. Now, with profitability achieved and crypto relaunched, the tone has shifted. More retail investors are speculating on whether Webull could hit $20 or even $50 over the medium term. Those numbers may be aspirational, but the fact they're part of the conversation shows how expectations are expanding. For growth stocks, sentiment often acts as fuel, and when the narrative is moving in a positive direction, it can create self-reinforcing momentum. That said, it's important to remain balanced. Execution risk is real. If crypto volumes don't meet expectations, or if global expansion in Australia proves costly without driving significant adoption, the market could quickly reassess. Regulatory surprises in the US could also complicate matters. And while profitability is a big achievement, sustaining it quarter after quarter will be the true test. These are the factors cautious investors will point to, and they can't be ignored. Still, looking forward, the setup for Webull remains constructive. The Analyst upgrade highlights that the fundamentals are trending in the right direction. The crypto relaunch ensures relevance in one of the most active segments of retail trading. The Australian expansion demonstrates ambition and diversification. And the technical chart shows that while consolidation is happening, buyers are stepping in at key levels. All of this supports a cautiously bullish outlook. For traders, the focus will be on whether Webull can push back towards $17 in the near term. That's the breakout level to watch. For investors with a longer time horizon, the bigger story is whether Webull can continue growing its user base, increasing deposits, and monetizing more effectively. If those trends hold, the stock has room to climb even beyond the current consolidation. So as we wrap up Tuesday's session and look toward the rest of the week, the narrative around Webull feels like it's shifting. Not long ago, this was a stock defined by volatility and speculation. Today, it's defined by profitability, expansion, and integration. That's progress, and progress tends to be rewarded in markets, especially when the macro backdrop is slowly tilting in favor of growth again. The big question for investors now is timing. Will Webull's next breakout come immediately, or will it take more consolidation before sentiment builds enough to push it through resistance? Either way, the ingredients are there for further upside. Powell's signal on rate cuts, the analyst support, the crypto relaunch, and the global expansion all feed into a story that's becoming harder to ignore. So while Tuesday's close at $15 may not look spectacular at first glance, it represents something important: stability, conviction, and a platform ready to build. For bulls, the playbook remains clear: stay patient, watch the levels, and recognize that the real growth story here is still unfolding. Webull has momentum, it has catalysts, and now, perhaps most importantly, it has credibility.